Does this in any way change your outlook on the prospects for owning Chinese equities next year?
Yeah, thanks. Good morning. It's nice to be with you. No, I don't think this does. We've recently moved overweight Chinese equities. That's been the first time that Morgan Stanley's been overweight in about 23 months. That follows on an upgrade of emerging market equities back in early October to overweight. And so, yes, we've seen some large moves in those markets, and that obviously reduces further upside, but we still see upside there. We still think emerging market equities can be up around 10% over the next 12 months. We think that China can perform in line to a little bit better than that over the next 12 months. And we still think that there's some positive momentum here going forward as China continues to guide towards an ultimate exit from zero COVID in the spring of next year.
In terms of the EM trade more broadly, we've obviously seen a bit of a turnaround in fortunes for EM in the last 6 to 8 weeks. Is there momentum ex-China for you to continue to buy maybe ex-China, Asia or LATAM at the moment into 2023?
Yeah, we think there is. So when we think about the macro environment in 2023, in some ways, it's a little bit of a mirror of 2022. 2022 saw very kind of resilient developed market growth, which drove a lot of inflation in the developed markets, which drove a lot of policy tightening in the developed markets. And 2023, we think, is kind of the opposite. You see much weaker growth in the US and Europe. Inflation comes down quite a bit in our forecast next year, but that means that the Fed makes its last rate hike this coming January or February 1st, and the ECB stops hiking in March. So it's a different environment. And so whereas the previous environment, the 2022 environment, was very unfriendly to EM assets, we think that the different environment, kind of the opposite of that, will be more friendly to EM assets, including non-China EM assets. So we're quite constructive on equity markets in Taiwan and Korea. We're constructive on equity markets in Mexico. And so we do think that the EM strength is not just a China story, it's broader than that.
Andrew, I want to pick up on the dollar and the US bond market trade, because it feels as though the dollar's declined more rapidly than that US 10-year yield. What's leading what here, and which is the better signal at this point?
Yeah, it's a good point. I mean, we've seen a faster decline in the dollar certainly than we expected. We had been forecasting the dollar to weaken over the next 12 months, but certainly not this fast. And I do think you have I think a lot of important questions that might get answered actually next week when we have US CPI on Tuesday, and then the Fed coming right behind it on Wednesday with what we think will be a widely expected 50 basis point rate hike, but also an opportunity to kind of adjust and manage kind of expectations around kind of where the policy stance actually is. So I think from this point, we're forecasting a dollar that's probably a little bit more sideways on a DXY basis. We have 10-year yields in the US ending next year at 350, so quite close to current levels in terms of level. But I think within that, we still think that that's quite consistent with a different story than we saw in 2022. And if we kind of go back to the previous discussion around emerging market assets, even if the dollar is kind of more stable, even if yields are more sideways, I think that's a much friendlier backdrop to a lot of EM assets than the enormous dollar strength and big rise in yields that we saw this year.